How much passive income did I receive this month? In this video, I'll reveal how much I received from both share dividends and premium bond prizes this February. And if you stay to the end, I'll discuss what shares I've been buying this month. My investing journey started in 2009 when I began investing spare money each month into the stock market. My aim was to not only see my capital grow, but also to generate a stream of passive income which might one day surpass the wages of my day job if I stuck at it long enough. Today I have a portfolio of around 30 individual companies and a range of ETFs, and get paid at least some dividends every month of the year. February is not usually great for dividends, and it took me 4 years to receive anything at all in this month. Let's return to the February of 2025 to see where we are today. This is not investment advice, and I'm just showing you my own journey. On the 11th of Feb, I received my first ever dividend from Sage. Sage is the UK's largest software company, providing accounting and payroll solutions for small and medium-sized businesses. The shares are up 1.9% so far this year, and the dividend is fairly small at 1.6%, spread over 2 payments. Sage has a great track record of growing its dividend year after year, which was a key reason why I bought into this company. This month, Sage Group paid out a total of £10. To see how much I hold in each of the companies mentioned, I've listed the totals in the video description, along with a few offers which could save you some money. On the 7th, it was a turn of Experian to pay out. This consumer credit reporting company collects and processes data on over 1 billion people and businesses worldwide. The shares are doing very well this year, up 10.4% already. The dividend is on the low side at just 1.2%. Experian has a great track record of growing its dividend consistently. This month, Experian paid out a total of £20. On the 27th, I received some cash from SSE. This multinational energy provider is the 33rd largest listed company in the UK. The shares have not had a good start to the new year, however, down 8.3%. The dividend yield is above average at 4.1%, spread over 2 payments. After many years of steadily increasing dividends, it's all been a bit patchy recently. Despite this, SSE did manage to pay out a total of £160. On the 28th, it was a turn of Greencoat Wind Energy to reward its shareholders. This company specialises in the renewable energy sector and is currently a member of the FTSE 250 index. The shares have had a difficult start to the year, down nearly 18%. The dividend is high, however, at 9.3% per year, and Greencoat is a quarterly payer. The dividend track record is good, and I'm happy to hold this company for the long term. This month, Greencoat Wind Energy paid out a total of £185. If you are finding this video useful, then I'd really appreciate a quick tap of that like button, as it really helps out the channel. The next share to pay out was British American Tobacco. This company is the 7th largest in the UK. The shares were really on a bit of a bull run last year, but so far this year they are more or less unchanged. The dividend is very high at 8%, spread over 4 payments a year. Dividend growth looks impressive. I'll continue to hold for the long term. This month, British American Tobacco paid out a total of £225. Now on to the monthly premium bond draw. I use premium bonds as my emergency fund, kept out of the market on purpose. The headline yield is currently 4%, but is falling to 3.8% from April. There is one draw a month. You have easy access to your money. There is a chance to win £1 million each month, and all winnings are tax-free. The first £1 million winner this February was based in Kirklees and had a maximum of £50,000 in bonds. You may be wondering if there is any point trying to win the big one with less than the maximum invested. However, the second lucky winner was based in Sheffield and had a total holding of £10,000. No million for me this month, but I did manage to win just one prize of £100. The bar on the left shows my expected winnings this year with 50k invested, and the bar on the right shows what I've actually won. As you can see, I'm behind at the moment, but with only 2 months gone, it's early days, and it'll be interesting to see what happens as the year progresses. So the total passive income this month was £700. But what's this? Oh, a letter from Mr. Claw. Let's have a read. Dear Mr. Compounding Investor, I am writing to inform you that some of your dividends this month were from shares held outside your ISA, and you have already exceeded your non-ISA allowance of £500 for this tax year. Please pay the sum of £9.88. Yours sincerely, Mr. Claw. Well, I guess that's fair enough. Here, have a tenner. And could I have my change back, please, and maybe some kind of receipt? Oh, I see. Oh, well, that's rather rude. And now for the overall passive income summary. The green bars show my passive income for the first 2 months of last year, and the blue bars are for this year. I find it very motivating seeing these amounts rise year after year. All figures are after tax. This chart shows how my average monthly dividends have changed since I started in 2009. This is just share dividends and does not include premium bonds. At the time of this video, I'm receiving an average of £1,431 per month in share dividends after tax. If you want to start your own investment journey, then Trading 212 will help you get started with a free fractional share worth up to £100. Just click on the link in the video description and open an account today. I'll shortly reveal everything I've been buying in February, but first a quick look at the payment dates for the month ahead, and this screen shows all the shares and ETFs which I own that will be paying out dividends in March. Why not subscribe and be notified as soon as the video is released? This screen shows the highest yields in the FTSE 100. Those in red, such as Vodafone and Rio Tinto, have faced recent dividend cuts. This is the danger of chasing very high yields. A cut often results in a share price fall as investors become worried. The average yield of the FTSE 100 is 3.5%. My own portfolio is even lower at 3.2%. But as I've been investing for so long and companies generally raise their dividends over time, my yield on cost is 6.0%. So what have I been buying this month? I've continued to add to my S&P 500 ETF. I like to keep this one outside the ISA as the dividend is low. There isn't enough room to keep everything inside. With this ETF, you are effectively part owner of the 500 largest listed companies in the US, all in one share. Here are some of the major ones you would own. 1% dividend is spread over 4 payments a year. The ongoing charge is just 0.07%, which makes it a very cost-effective way of getting some diversification into your portfolio, although there is quite a heavy bias towards tech stocks. Historically, this ETF has done very well and is up over 100% in the last 5 years. However, this year so far has not got off to a great start, and I'm happy to add more at these lower prices. And if it falls further, I'll keep adding more to my portfolio. If you are considering investing for the long term, then you might want to consider a stocks and shares ISA. And to see which platform might be right for you, then click this video here.